very good afternoon from Edison, New Jersey. I am here in New Jersey for 3 days. We are doing a seminar in the city of Addison, Princeton, and also in Exton, Philadelphia. So I am here today. This is our office here. This is the signboard that we have. This is our Addison office. So it's pleasant weather here. You know, it's not cold. I have been lucky. And I am here with my colleague Anil, who is actually shooting this my video.
Hi.
And I would like today I am here to talk about rental property losses. And before I talk about that topic, I would also like you to see our New Jersey office. So Anil will go around with the phone and show you the office, and then I will talk to you about Facebook Live. So Anil, let's give a tour of our office to our viewers. So this is our office. You can see the My Tax Filer sign here, and this is one of the doors, entry doors, and this is how our office is kind of structured. We have a private office, and then we have a few cubicles here, and then we have a private office here too, a conference room, and then you can see the logo here for My Startup CFO, and then My Tax Filer. So this is a small office that we have in the city of Addison. It's been growing slowly and steadily. We would like all our New Jersey viewers, clients to support us and do business with us. Coming to the topic of the day, rental property losses. So I see a lot of my clients having rental properties, and some of them do incur a loss because of the expenses being too high, or the rental being too low, or the depreciation being high, or just that the property has been vacant for a few months. So that's when you have a loss on the rental property, and rentals are always considered as passive, and the losses that happens from rental property are always considered passive losses. So what passive means is that you are actually not putting your effort for running that business. Whether it is employment or whether it is investment properties, it is always considered as trade and business. But for the purposes of the computation of income and losses, it's considered passive. And when you have passive losses, it can only be adjusted against passive income. That means if you have a W-2 for say about $300,000 and you have a rental loss of $50,000, you cannot make that set off. You cannot be paying tax only on $250,000, but you can carry forward that loss of $50,000 to future years. For that year, it is considered as a suspended loss, but it carries forward. So whenever you have a passive income, you can adjust it against that, or whenever you sell your property, you can use that loss against the gains of the property. So that is how the rules work. Now there is an exception to this. If somebody has an income, adjusted modified gross income is what they call, modified adjusted gross income, or MAGI, M-A-G-I, and when the MAGI is between $100,000 and $150,000, there is an exception to take the losses coming from property or rental property of up to $25,000. So less than $100,000, you can get that full 25K set off. Between 150 between 100 and 150K, you get a pro rata share of that $25,000. So that is about rental property. And there is also one more exception. If you have your real estate license, and if you and your spouse together spend more than 750 hours, you can consider it as an active trade, and the income or losses coming from that is considered an active income or loss. So this is about rental property, and I always keep telling my clients to invest in rental real estate, so that your portfolio is kind of diversified, and your retirement as well as kids education and things like that goes well. But this market as of today is a pretty hyped up market. So from the last 1.5 years, I've been telling clients to be very careful, even though if they are investing in real estate. But there are markets and there are times when one can get a good deal and invest in the right kind of investment, because you are investing in something to make more money in the future, not like your personal property where you intend to stay for your livelihood and for your as your dwelling. So that's about it about rental property losses. Income, there is no problem because you pay taxes on it. Losses is where people get confused. Once again, guys, thanks a lot for watching me. This is the tax planning season going on right now. If you need help with planning your taxes, this is the time to think about it, because we just have about 50 days and we are getting a lot of clients. And the reason why I'm in New Jersey is doing this seminars and meeting clients who need tax planning. And if you are making more than $250,000, assume that you need tax planning. And if you are making more than $600,000, you for sure need tax planning. So contact me if you need help. taxplanning@mytaxfiler.com. Once again, this is CPA Sudhir from Addison, New Jersey. I'll come back next week, next Friday. And till then, thank you very much and have a good week. Bye-bye.